Today we are breaking down arrivals, clean arrivals, bad arrivals, and why it is so important for you to be trading good arrivals. We're going to go through trade reviews. We're going to break down the stats behind win-loss percentage when you take bad trades or bad arrivals versus good arrivals, and what is it? All right, because this was something in my trading that I really struggled with early on. And I reached out to my mentor and I'm like, hey, when you're reviewing my trades, I hear you say sometimes this is a good arrival, this is a bad arrival. And then sometimes I would hear you say, this is a really good arrival when I didn't think it was a good arrival. And then sometimes I would say, I would think that this trade was a really good arrival. And you're like, no, it's not a good arrival. And I was dealing with frustration. I was just like, hey, man, just give it to me straight. What is the best type of profit margin arrival that you want? Time. And he says, I want price going straight back into my zone. I don't want opposing zones being created blocking my profit margin. And this made probably a 20% win-loss difference in my trades, and we are going to break down that. Okay, so what do I mean by clean arrivals and bad arrivals? Well, like I said, I don't want opposing zones being created when I'm about to enter a trade. Okay, so I want to have a trading setup. This could go for higher time frame or lower time frame. I don't want opposing zones being created blocking my profit margin because it's just more work that the price has to do. And like I said, it was a 20-30% difference in my trades. Once I started taking them and I was reviewing the trades, I was noticing this big difference. So now it's a staple in my trading that every single time when I take a trade, I need a clean arrival. So let's break it down. So what exactly does this look like? Well, let's go into a trade review. I have these down here. And right here, let's start with a perfect example first of all. Now, notice here on US 100, this is a trade that I took today, this is the sell pullback that I was selling. Let me draw here. This is the zone that I was selling, and I sold on the pullback right here. That's where I got filled. But notice how price comes back. Price comes back in a very strong fashion with this big, strong black candle. That's what I want to see. I don't want to see prices, say, returning coming back up to my zone, creating opposing zones, because now this is just another opposing zone that is blocking my profit margin, right? So that's what I want to see. I want to see prices coming straight back up into my zone, which gives me a clear profit margin, all right? Another example, this was another trade from today, was the US 500. I bought this pullback. I'm not going to talk about too much about the quality of the setup. We're going to talk about more so the arrivals. But what I noticed here is this is not what I wanted. I don't want this being created. Notice how we get a drop, base, 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 drop, base, base, drop. We kind of have two levels of supply right there. That's something that price has to eat away with. And I don't want to have these opposing zones being created. So I enter here on the pullback, but I'm aware of, hey, this isn't a trade that's offering me like a 3-4 to 1. So what I did was I took profit at like a 1-to-1 risk to reward. And sure enough, it came up, reacted off of the supply I mentioned that it might, and continued to break lower. All right, versus the other trade that I took up here, down here, was price came straight back up into it, and it was a 3-to-1 trade, 2.5 risk to reward to be exact. But prices then went on to break all down here, but before that it did reverse and would have broken the zone. But hey, I got out at a 2.5 to 1. Okay. We look here at a trade review this is a trade review from Liam. What has he taken? He's taken this sell pullback, but notice how prices are returning straight back up into it. He has very bullish candles going straight back up into it. He doesn't have any opposing zones until down in here. So that's where I'm looking to get out of my take profit personally, right? Perfect. Let's go through another example. Okay, here is Bento. I like where he was taking profit here because if you notice, here's his supply zone that he is entering his trade, but prices came back up. He could still take the trade, but it's just not enough profit margin for me. You notice how it created this drop-based rally. So if prices rally up, gets him filled, well, now he has to eat away at this zone right here, which seems to be slowing it down, right? You can see it came in and it's been slowing down, and now we actually have a big, strong, bullish green candle. Usually when these trades work, they work very quickly, as you see in my previous trades. Right? Look at Liam's. Goes in and it starts working right away. Right? You see these trades. Fills me, works out right away. You look at this one. This is a 30-minute time frame, so it's going to take a little bit more time. This was during the Asian session. I was getting the pullback, so not much movement, but right when the the London Open happened, That's when we started getting the volume coming into the trade. Let's go through another trade example. This is a trade from Sebastian, old guy in the group. He was buying this pullback into this area of demand. I think it's a good setup, nothing wrong with it, but this is the problem that I see with the trade. You notice how prices are coming back down into it with these three strong red candles, and then all of a sudden it starts basing out. That's not something that I want in my trading. It's creating a base camp for prices to drop. And then let's imagine that a big strong red candlestick gets printed. Okay, well now you have a drop base drop. Now for me, I got to worry about this drop base drop, which is now cutting my profit margin. It might go up here, come back down, stop me out. It might come up here, screw around a little bit, come down, then work out. I just don't want to deal with that type of stuff. And I have seen with my own eyes a massive win-loss difference ever since I started doing this. Here is another trade review, an example of what I don't want to see. Really good trade setup. I love it. Love this zone. Really, really good leg out. Actually, this is a video I released last week talking about importance of leg outs. Really good confirmation setup. I love it. But look how prices come back into it. It's grinding down and then creates this opposing supply zone right here. That's not something I want to see in my trading because now it has to eat away. Actually, you can see how prices reacted off of it. It came down, took off, reacted off of this supply, instantly came all the way back down, searching for the next stack of buy orders, raged up. It ended up breaking through the supply, but then sellers took control and ended up breaking the zone. I'm not sure if it continued to be a loss or if it actually went up, but I just don't want to deal with this. I just want these easy profits. I just want prices to touch my zone and take off. That's all I want. I don't want to be dealing with these poor arrivals. And if we break down the stats behind this, let's break it down. So this was a back test I was doing just randomly for the group. And what I noticed was overall we went 5 for 18, which is a 27% win-loss percentage. And we made 1.25%. Nothing special. All right. But we were comparing clean arrivals versus bad arrivals with a 3-to-1 risk to reward. So every trade, if we win, 3-to-1. If we lose 1R. But if we win 3R. Perfect. We still ended up making money. But what was interesting about this is when it came to bad arrivals, we went 0 for 5. And when it came to good arrivals, we had 5 winners and 8 losing trades overall. Calculating, coming to 5 out of 13 trades, which is a 37% win rate. So if we only took clean arrivals, we would make a profit of 7% gain. Perfect. Eliminating those bad arrivals is very important. Here's another example of another trader. He was looking at clean arrivals, reviewing all his trades, saying, hey, what makes sense? Well, what did he notice? He noticed that he has a lot more winning trades when he has clean arrivals. He had 15 winning trades, 13 losing trades. He compared it to poor arrivals. He had 2 winning trades and 8 losing trades. All right. Then he was also scoring out the zone, saying, hey, what's the confirmation like? What's the quality of the zone like? And what he noticed, well, look, when he's trading a really good quality zone, he wins a lot more. And when he's trading a poor quality zone, he loses a lot. He only won 2 out of 13. So this is why it's so important to score your zones to make sure you're trading quality zones and remain disciplined to the rules and getting rid of these bad trades, bad arrivals, bad scoring quality trades. All right. Here was another trader. He was posting in the backtesting tab. Number 1, clean arrivals had a 10% difference from 37 to 47%. So perfect. So he's going to be changing that. He had a 10% difference. Awesome. This was a trader that actually he had the reverse. He had 66% of his losers had clean arrivals and 58% of his trades had 58% of his winning trades had clean arrivals. So clean. Okay, I think he made a screw up there, but it didn't make a significant win-loss difference. I think he was having better results with poor arrivals. But hey, that's totally fine. I'm not saying do this. I'm saying review your trades and see if you actually notice something different and let me know in the comments below. And this was something I updated people at the end of the year. I also wanted to document this from previous years when it came to clean arrivals are much better overall when it comes to profit margin, which resulted in a much better, much higher win-loss percentage than having bad arrivals. Perfect. Okay, so here's another one that somebody did, 20 trades. Clean arrivals, he had 4 winning trades and 2 losing trades. Versus if he took bad arrival trades, he won 4 winning trades and he lost 10, right? A 28%, no, that's not right. not 28%, but oh, I guess, well, 14, 4 divided by 14, is that right? I have no idea. 28% overall. That's not very good, right? So clearly he should stick with clean arrivals, right, guys? And so this is why it's so important when you get these quality zones is being aware of how price is coming back up into your zones. There's a reason why I took profit here at 1-to-1 versus here on this one, I took it at 2.5-to-1, right? We go through another example here. There's a reason why this guy, Liam, is taking profit down here at 2-to-1 or 3-to-1 versus getting out at a 1-to-1. All right, there's a reason why here on Bento, he's getting out at this opposing zone because this is the next opposing zone that's blocking his profit margin. He wants the easy take profit. I don't want to say easy, but when you have to go through these types of zones, it's a lot longer the trade it takes out to be played out, and it's less probability. So you think about it, it makes more sense to be taking clean arrivals. Heck, you don't get the clean arrival, don't take the trade. Not enough profit margin, don't take the trade. All right, it's that simple, guys. You see, when they're reviewing their trades, yes, they are going to have a lot less trades, but they're going to have higher win rates, better quality trades, which they'll make more money. They've got to get rid of these. Now, I'm not saying this for everybody. Review your trades, see if you notice a big difference, right? I have a whole YouTube playlist on this. If you go to my YouTube, click on playlist. Supply and demand course, part 1, part 2, part 3. What is supply and demand? How to identify zones, how to draw zones, quality over quantity, multiple time frame analysis, how to determine take profits, trading psychology. It's an excellent trading platform for you right here on my YouTube channel, so you can learn more about the supply and demand methodology, as well as the last video I uploaded was stop trading supply and demand. It's like stop trading this type of zone, like focus on the quality of the leg outs, right? And this is what we try to teach in the Moneyball Trading program. So if you guys wanted the free training on that, moneyballtrading.com, that will be in the description below for you guys to sign up for that free little class. And then I'd love to have you part of the team as well. This is where you get access to the full course material, top-down ebook, course lesson videos, as well as the Discord membership calls where we have 2x weekly calls, the back testing, the community Discord, trading plan, one-on-one training, homework quizzes. It's everything, man. Everything's laid out for you guys. So if you guys want to check that out, moneyballtrading.com. Hey, if you guys really do appreciate this video, really help if you guys hit that like button. If you want to subscribe, feel free to subscribe and join the Traveling Trader, bringing you trading content. If you guys have any questions about this, let me know. Important to be reviewing your trades. Make sure you're journaling. All right, guys, I will see you in the next one. Have a good one. Cheers. Bye-bye.